Morning. Welcome to a very interesting but a different session where I'm joined by two panelists, both of whom are based in the US, who will be sharing their perspectives on the fintech scene in South Asia. I'm Joji Philip, the founder and editor in chief at DealStreetAsia. And I look forward to having an insightful conversation with Tilman, who's a managing partner of Flourish Ventures, and Sheel, who's the co founder of Better Tomorrow Ventures. Just to put the panel and the discussion in context, let me just throw out a few numbers. And if you look at Southeast Asia alone, the fintech startups here accounted for the most number of deals in 2020. I'm not even looking at the unicorns like Grab. Um, in terms of deal amounts in 2020, fintech startups in Southeast Asia raised about $1.3 billion in investor commitments, according to DealStreetAsia data. And the figures for a market like India are way, way higher. Before I begin, let me just take a minute to introduce both our panelists. Spun out of the Omidyar Network in 2019, US-headquartered Flourish Ventures focuses on neobanks, insurtech, embedded finance. So it's largely fintech focus, and some of their South Asian, portfolio companies include the largest internet or the startup in Southeast Asia, which is Grab. There's Qoala, there's Tanihub in Indonesia, there's ShopUp in Bangladesh. And Tilman believes that Southeast Asia especially has arrived at the crossroads where it can borrow multiple influences from the fintech ecosystems across US, China, and India. Better Tomorrow Ventures is a $75 million fund that leads rounds in pre-seed and seed stage fintech companies globally. The co-founder Sheel, who's joining us today, he's of the view that fintech is a great way to improve people's lives. He's based in San Francisco, and Better Tomorrow Ventures also invests globally. They've also made a couple of Asian bets, including Indonesian startup Brick. They have in Pakistan, they have Credit Book. And Sheel is also a limited partner in AngelList backed iSeed microfund. So let's get into the discussion. And Sheel, let me start with you. And I'm starting with a big picture question. Most of Asia actually, and especially Southeast Asia, skipped the landline revolution for phones, and they went directly to the mobiles. They also skipped the desktop or the PC revolution that you had in the West. And the first experience of the internet was, for most of the people here, was directly on the mobile phone. And now they seem to be skipping the whole account, the whole banking experience, which is like a traditional going to a traditional bank, opening a bank account, having a debit card or a credit card, or having a checkbook. And they're doing all of this, be it loans, wealth management, trading, mutual funds, on their phone. And most of the traders, the mom and pop stores, they also seem to be using the first time they're using software. They are doing it on their mobile phone. So are we witnessing a huge momentum shift in this part of the world, where the first experience for all these services are actually on your mobile?
Yeah, absolutely. And I think, you bring up a good point that this population never really used a computer, a big part of this population. And I think the reason is simple. And the reason that the shift is happening now is simple too. It's smartphone penetration has increased drastically. So I think throughout Southeast Asia, sort of off the top of my head, I think smartphone penetration is 60% or greater now. And, a number of things have conspired to make that happen. But, one of them is simply the prices have come down significantly of smartphones, and mobile data has gotten very cheap. In India specifically, as everybody knows, Reliance Jio has made really high-speed internet cheaper than anywhere else in the world. And that has had a massive impact on the introduction of smartphones into parts of India. And so, if you give people a computer and have a product that is useful and better than what they were doing before, they will use it. And it really excites me, the possibilities that we have with this computer in everyone's pocket. And of course, you brought up so many good things that we have. Lending is made so much easier. Specific to me, this is dear to my heart. I, at one time, worked in microfinance, and literally taking a bus and then getting on the back of a motorcycle to service one borrower, completely inefficient. And now we have smartphones that is, in a split second you can do it. So I'm really excited for this future, and think we're actually in early days.
Yeah. Tilman, again, a more of a big picture view. She spoke about mobile phones. So the penetration is very high. I think Southeast Asia has some reports is as high as 70%. Data costs have sort of come down significantly. I think among the lowest in the world. Along with these factors, how much did the pandemic contribute in terms of sort of accelerating fintech usage adoption in this part of the world?
Yeah, I think that is universally the case, that the COVID crisis, and in particular the lockdowns, accelerated what was already happening, but it accelerated dramatically as people had to live, work, shop, socialize, do everything from home. So the need to go online has been dramatic, and that is true across the world, and it's also true in Southeast Asia. I scanned the Google Temasek economy report that they do every year, which is excellent, by the way, and I saw the numbers. There's some 40-50 million new mobile internet users. When it comes to online digital services, 1 out of 3 users are new in the last 12 months, and they are very happy with that life. So 90% don't want to go back to the previous world. So yes, absolute rapid acceleration.
Interesting. Yeah. The Google Temasek report has some fascinating numbers, especially in this part of the world, and the non-urban people numbers are very interesting in terms of the first-time users and how quickly they've been adopting. So Sheel, again, more a big picture question. So in the West, the fintech adoption is just a replacement of what you were doing through other means. But when you look at Asia in particular, be it micropayments, auto debits, buy now, pay later, or we look at embedded billing, embedded lending, all of this. For this part of the world, will it create a new cycle of consumption? Because a lot of people are doing it for the first time.
Yeah, it's a good point. I think in the West, we've had this, credit market for quite a while, and many Americans rely on credit. In Asia, there have been a different type of credit market, typically secured credit, and I think there are reasons for optimism in the current climate, and I think my career in fintech actually started in microfinance, so I'm particularly excited about credit for building businesses. But so sort of my hope is that these companies build solutions that yes, increase consumption, but also increase production. And I think that's sort of what I'm more interested in investing in. But certainly consumer loans will exist and are getting more popular, and I think there will be a lot more consumption. So I think we're actually in pretty early days. Back to the last question, smartphone penetration is there, and it's growing, and it's growing amongst the middle class. So if you look at the companies, middle and upper class, if you look at the companies that have had a lot of success, I think ParthPay, Grow, Cred, Digit, all these guys, they're not focused. Most of them are not yet focused on sort of the lower and middle classes, but I think that's coming.
Got it. Just one final big picture question, and throwing it open to both of you. Sitting in the US, when you look at Asia, be it Southeast Asia, India, for now I'm just keeping China out of the picture, but when you look at this part of the world, what are some of the trends over the last maybe 12, 18 months that have caught your attention, which you think may perhaps be unique or maybe first in, or it's the first time that you're seeing it in this part of the world?
Yeah, I go back to your kind introduction, Joji, when you said that we believe, and I believe, that Southeast Asia in particular has probably a unique opportunity to forge its own path as it comes to the financial sector. And the reason why I'm saying that is Southeast Asia has, or the emerging markets of Southeast Asia, I should say, for clarification, they actually have higher per capita GDP than India, for example. They have the higher mobile internet penetration that we already talked about. Yet the traditional financial sector, traditional banking system has much less penetrated the economy. So you have this big opportunity, if you will, coming from a lower starting point. And I really believe that Southeast Asia has this opportunity to catapult itself to the forefront. And in particular, by leveraging what we call, or by leveraging this notion of embedded finance, i.e. non-traditional platforms that are actually really important in people's lives, be it small corner store merchants, be it farmers, be it gig economy workers, could be social media, non-traditional, non-financial platforms, super important in people's lives, high engagement, low customer acquisition costs, generating data that actually has predictive power for credit and insurance, for example. So we are a big believer that this embedded finance notion is particularly strong, or has strong potential in Southeast Asia, which is why we invested in what you mentioned at the outset as well, right? Tanihub, that's smallholder farmers, ShopUp in Bangladesh, that is corner stores, and then Grab is a bit of an unusual Series A, because it was obviously already a huge platform. We invested in the financial services arm of Grab for the gig economy. And that's quite different from India, right? India is more Anglo-Saxon in its approach, traditionally strong banking system, much more banked, sophisticated capital markets, but lower per capita GDP, very activist government and regulation, the India stack. So very different India model versus Southeast Asia. Both very exciting, but with different flavors to it.
Yeah. Tilman, just something related to, and I picked up from what you said, especially related to the gig economy. And big questions are being asked, not just across Asia, and I'm sure it's the same in the US too, on the benefits, welfares, all of that for the gig economy workers. Be it Southeast Asia and India, millions of people who are joining the workforce are actually joining with a company, or it's a gig economy workers. And in that context, do you think there'll be, and many of them will be using fintech solutions, insurance, all of that for the first time on their mobile phones as they join the gig economy. In that context, do you see a bunch of unique solutions in this part of the world, even in China, that are address the gig economy workers?
Yeah, 2 points quickly. First, your observation contrasting the gig economy in emerging markets and in the US, right? In the US, there's this concern that the gig economy creates inferior jobs, less social protection, variability in income. It's a step down from your traditional job that had job security, that had company benefits, etc. In emerging markets, it's the other way around, right? The gig job is often the first step towards the formal economy. It's often the first formal economy type job. And it's a step up. It increases the earnings power. And in that context, right, embedded finance that provided by these non-traditional financial players, the platforms, is actually super powerful, because if you take the traditional functions of finance, which is slicing and dicing cash flows across time, space, and probabilistic states, that's really what finance does. A gig economy platform has real advantages to provide that, right? They can help you with a payments piece. That's the most obvious one, but they can also provide you with credit, working capital, vehicle loan, vehicle insurance, because they have the data to underwrite. Traditional insurance could have never reached these gig economy workers, right? The ticket sizes are too small, the distribution costs are too high. And so, yeah, we do believe that there's a real opportunity to innovate and do things that in the West are neither necessary nor well, I shouldn't say feasible, but are just not as pertinent as they are in the emerging markets of Asia.
Got it. And Sheel, what are the trends that have caught your attention when you look at Asia?
Yeah, I think, a lot of the stuff Tilman mentioned is super, the same stuff we look at. So we are excited about embedded finance and actually together have made some investments in the space. And I think really, part of the excitement about embedded finance is these building blocks for the next set of companies, the next sort of stage, the next decade of fintech will be built on top of these companies. And laying that infrastructure is really useful. And it's actually even more useful, I think, in Southeast Asia than it is in the US, because the beginning infrastructure was not as good. And so getting started for these companies has been historically been very difficult. And now that there are companies making it easy to build on top of bank and money movement infrastructure, there will be a lot more coming, and we've seen that in the U.S. So in the U.S., starting a neobank went from a 2-year, $10 million project to a 6-week project with no money raised, and we've seen the tremendous growth in neobanks in the past few years thanks to that. And I think the same is coming in Asia. The other thing that excites me is there are, of course, there are businesses that are similar to the businesses in the US. There are also sort of net new businesses that could not have existed in the US. Sort of on the SME side, we talked a little bit about the mom and pop shops using software. And so the Kata Books and OK Credit and Buku Warung, Buku Kas, Credit Book in Pakistan, all in that model have really been an innovative thing. And many millions of shopkeepers are using these products, which is exciting. We recently invested in a company called India Gold, and growing up going to India frequently, I always thought it was crazy how much money was put in gold. All of the money my family had was in gold, and it's actually a real drag on the economy if you think about it. So India Gold, they store your gold securely for very cheap and give you a loan against it. So it's actually, I think, if it becomes very popular, I think can actually have an impact on the economy, because all of this gold is stored is just being completely unproductive.
Yeah.
So it's a cool business that is India native.
I think India Gold is interesting because it's also a stigma attached. If you need a loan against gold, it's tough to walk into any of those the pawn shops to get it.
Exactly.
And in this context, like I think they come home, they pick it up, value it on a using a scientific process, which may not be the case always when you do it outside. So I think, yeah, that way, I think companies in that space can be a game changer.
Yeah, I'm excited for it. And then just speaks to the innovations that are happening. I think a lot of Gen 1 was Me Too. Same product being built in the US. And I think nowadays we're seeing a lot of really innovative solutions that are not just localized but actually a solution that works in these markets specifically.
Got it. Tilman, just related to that, the fintech in the West is largely looked at, big finance can be disrupted or, can be done better with a tech makeover. But across Southeast Asia and India, they're not the companies, the startups, or even the unicorns. They're not really targeting big finance, but they're sort of trying to remake the entire financial system. These startups, like Sheel mentioned, are the building blocks. They're the ones putting the infrastructure in place. So it's very different, right? When you look at how fintech is seen in the West compared to most parts of Asia.
Yeah, that's right. So listen, I mean, a financial system is characterized by the incumbent industry structure, right? The legacy technology that's around, consumer behaviors, the regulatory environment, and at some level, fintech innovation in the US has been much more incremental. And the original gangster of fintech is probably still PayPal in the US, right? 20 years later. So the potential to be truly, truly disruptive in Asia and in emerging markets is much higher because you innovate into white space. And it relates to the leapfrogging that we talked about earlier. So I mentioned these non-financial platforms that are much more natural owners for good chunks of retail finance. And what Sheel is talking about is a digitally native API cloud-based modern infrastructure, because these non-traditional or non-financial platforms still have to connect with either regulated balance sheets or insurance companies or the capital markets when it comes to real financial intermediation. So you need, or you could easily imagine, a very different industry structure that takes the best of the 21st century and provides far better and far more adequate services, adequate for the context, right? Like your example of gold loans in India, far better services at far lower cost for far more people. And that is really, really exciting. And that is one of the reasons why you do see that type of fintech activity that you mentioned in your introduction.
Yeah. And Tilman, one of the things that I wanted to ask you specifically about, you recently participated in the Bangladeshi startup ShopUp latest $75 million round, which I think is massive, especially for that country and for the ecosystem. But not just Bangladesh. When you look at, especially in markets like Indonesia, India, we're seeing increased activity even in markets like Pakistan, in Vietnam, where a lot of these merchants, or for the small stores, which is like the mom and pop stores, which are called Kirana in India or Mitra in Indonesia. Yeah. Is there a huge, and considering the number of deals that have happened in that space over the last maybe 12 months, for global investors, do they see a huge opportunity in this space? Because South Asia has several millions of these small retail neighborhood stores.
Yeah, and this is one of these opportunities that, again, is quite unique to emerging markets, right? So as you say, you have millions of, tens of millions of small corner stores. They typically live in the informal economy. They have very inefficient supply chain processes, the logistics, pay in cash, keep their books on paper. These stores, though, during the lockdown, to your earlier question, right, they actually became more important because they were part of a very resilient, decentralized infrastructure. And so we already, before COVID, had seen this opportunity to help digitize the corner store, bring efficiencies on the procurement side, on the logistics side. And when you do that, you start to learn about the business, and you can sort of proxy the cash flows, and you can say, hey, this corner store could actually easily borrow for working capital needs, or we could provide better payment terms for their merchandise stocking. And you can provide, in partnership with banks, obviously, because you need sources of funding, but you can underwrite credit that the traditional financial system would not have been able to underwrite, because you know so much more, and the efficiency gains are huge. And so we were the first institutional investor in ShopUp, very proud of that, and have followed through many rounds. And indeed, this is the largest this type of investment in Bangladesh. The same phenomenon is playing out across the emerging markets. We have similar investments in Egypt. We have one in Brazil. Sheel already mentioned the Indonesian versions. This is a big space, and it helps the entire economy become more productive.
Got it. Yeah. Sheel, a related space here is also the SMEs, which is a small and medium enterprises, the credit requirements. That's something that's again massive in this part of the world, which banks have not been able to address because we don't have credit ratings in most Asian countries. And it's difficult for many of the small outlets or the small companies to sort of access credit. So how big is that an opportunity?
It's a massive opportunity. And I think it all comes back to what Tilman said, actually, which is you don't start with credit. You start with this other software that gets you the data that you have to underwrite the credit. And so companies like ShopUp that Tilman invested in and others are starting with software or goods movement, a few other things, but they're the ones that have the data that's required to underwrite these SMEs for a loan. And so I think that is the opportunity, and that's why we're seeing so much excitement in that sector.
Interesting. So do you think the data that these companies have, like these startups have, whether it's for bookkeeping, whether it is for logistics, whether it is for supply chain, eventually, just hypothetically, I'm just asking, eventually will that become the credit scores for many countries in this part of the world?
Yeah, I think you need that data to underwrite, and you know, whether or not somebody makes the actual score out of it, I don't know. I think there's definitely a possibility for it. We've seen some folks trying, but I think that's what you need. Now, it's a lot of data for somebody. It's a lot of data for a third party to get access to. So I tend to think that these software solutions, integrating supply chain as well, will be the solution. There won't be a third party data source, I think, because there's just so much data that is proprietary that people probably won't share.
Got it. Tilman, one of the issues, be it Southeast Asia or India, is that a consumer today uses 7 to 8 or sometimes even more number of fintech apps. You know, everybody has a wallet. You're using for each and every fintech solution on your phone. You are almost using a different app. But you think some sort of consolidation, is it too early to sort of see some sort of consolidation? And if there is consolidation, do you think that investors being aware of the opportunity will sort of bankroll this consolidation?
Well, I mean, there are different dimensions to this. So on the demand side, consumer behavior, I suspect that most folks would be willing to use 2-3 mechanisms, right? In the analog old world, what we observed is that people like mental accounting, right? They would say, listen, you know, I put some savings away for the kids and I literally put them in a jar. And then I have a different jar for the small pleasures of life. And so people like mental accounting. They like to keep financial means separate. It helps them with budgeting, planning, with discipline. So I could imagine that people are willing to not consolidate on the demand side, everything into one app or one payment mechanism. People will not use 12 either. It will be some manageable number in between. And if you think about your own behaviors, right, we might all function that way, right? We have a digital payment. We do have a main card. Our mortgage was a big the house purchase and the mortgage was a big deal. So we researched that, and we are happy to do that with somebody else. So that's on the behavioral consumer demand side. On the industry, on the supply side, if you will, sorry for using a bit economist language here. On the supply side, you have clearly services that benefit from network externalities that are natural oligopolies or monopolies, even payment rails, payment systems. You will not have hundreds of different payment systems. There will be very few. And because of these tendencies, by the way, of these oligopolistic or even monopolistic tendencies, the regulators are very concerned about that. And they might force the system to be open and accessible to everybody. They might want payments to be a utility. That's different for credit, right? Credit, we like to be more decentralized. Credit is also profitable at a much lower scale. You take asset management, again, that needs scale, so you will have relatively few players. So you have to parse the financial services universe to answer your question. So sorry for being a little complicated here in my answer. But if you want to probe a little deeper, Sheel, you might have a perspective. Happy to peel the onion on this one.
Yeah, Sheel, please go ahead.
No, I think we're in agreement there. Yeah, nothing useful to add there.
Okay. Sorry, Joji, you won't get a spirited debate out of the two of us.
Yeah, unfortunately, we
are seeing the world from first principles pretty similarly, I guess.
Yeah, but when both of you look at the companies in this part of the world, apart from there's also some level of fragmentation, because each country has different rules, regulations, systems. So does that sort of prevent some of these companies from becoming as big as their counterparts in, let's say, the US or China?
Yeah, I mean, I think size of market is a potential issue, but you know, there are actually some anomalies out there, right? So there are companies like Wave in Senegal that just has, Senegal is a tiny country, I think 20 million people, and half of them are using Wave. There's a company we looked at actually in Kazakhstan that also sort of similarly, everybody's using it. And so I think, you know, are there going to be, you know, $100 billion companies in these markets? It's going to be tough, I think. But, you know, we have Grab obviously in many markets, but I think for a country specific solution, it's going to be tougher. I think this is always the case in fintech. Like there are very few companies that can scale globally the way that a Facebook or Snapchat can quickly. And so it takes time. But I think many of these markets, sort of the South Asia and Southeast Asia put together are, you know, a third of the world's population. And there's a massive opportunity there overall.
Yeah,
go ahead.
No, I vehemently agree. I mean, financial services are regulated at a national level typically, right? And so they tend to have to scale in country first. And of course it helps if you have a massive domestic market like China, like India, like the US. But the large emerging markets of Indonesia, the Philippines, Vietnam are certainly large enough. And what we really like are the folks who from the get-go design, if you will, their business as a multi-local platform. And in particular in Southeast Asia, there are really a number of folks who do this very well. They are incorporated in Singapore, but they have operating companies in all the markets. And they know that they need very, very strong local leadership to understand the local consumer and customer demand needs and behaviors. They need to understand the local regulation. And there are, in these new digital businesses, take the digitizing the corner store dimension, for example, there are clearly similarities across emerging markets. and there are learnings that can be brought from one geography to another. And if you stitch this together in a very intelligent, multi-local way in Southeast Asia, that is a very big opportunity.
Yeah. So when you look at like when you said stitching it together or multi geographical opportunities in Southeast Asia, there's no better example than Grab, and you are investors in the Grab Financial. So and if you look at the latest results of Grab, I think the Grab Financial vertical had another record quarter. Everything in terms of from the payment side, the wallets, loan dispersals, the buy now pay later arm, all of these subdivisions have seen record growth. So specifically for Grab, do you actually see once they sort of list, which would be in the next 2 months, do you see the financial services arm being key to the company's future and also sort of them maintaining and growing their valuations?
Yeah, I obviously can't speak for the company, and they are in an SEC process, so they have to be very careful with what they say. But if you look at the investor presentations at the time of the SPAC merger announcement, if you look at the most recent regulatory filings, they filed the so-called F4 with the SEC in the US, you will notice that financial services play an important role in the story that they tell about the company. There's obviously mobility and food, and mobility has been hurt by the lockdown, and food has been accelerated, and financial services from a smaller base is one of their growth vectors. And we believe that they are right in believing that for all the reasons we discussed earlier around the embedded finance opportunity, right? The Grab has, again, as per the most recent public numbers, they have 25 million monthly transacting users, they have 5 million drivers, they have 2 million merchants, and they have real synergies. So many of the food drivers, the food delivery are also drivers for the ride sharing. And many of the merchants use GoPay. There is, again, this is in the public data that they have shared. There's real synergies here with the financial services piece as well. So their starting point is, of course, to just start with penetrating that installed base, if you will, and their own platform. And then they have aspirations to go off platform as well, and do so in a number of geographies with the right partners and regulatory setups. There's a lot of growth opportunity there, and that's what has the company excited, and that's why they were able to go the route that they are going.
Yeah, and Grab's the investor presentation that you mentioned, and if you look at it, obviously those presentations were done before some of the regulatory crackdowns that we are seeing in China today. But at that time, they also looked at the likes of Meituan and Ant Financial in China, and shown that there's massive potential. If sort of those numbers were usage adoption in China were seen as a benchmark, then Southeast Asia is just as a tiny fraction of where China is currently. You agree, Tilman? Therefore it's like...
That's right, yeah. So if you look at the macro numbers in terms of e-commerce online penetration, digital payment penetration, Southeast Asia today versus China today, there's a lot of catch up already. Now, of course, China is in absolute terms a bigger market, but we also have this phenomenon of leapfrogging that yes, we talked about. You know, I do think it's actually really important to understand that technology innovation or technology-led innovation has always historically in financial services in the 25 years that I've been part of this, it has always hit markets with certain industry structures, consumer behaviors, alternatives already in place. And and the 2G feature phone mobile money story is unique to Sub-Saharan Africa and M-Pesa, you could argue. The Chinese story of the two-walled gardens around the Alibaba Ant financial ecosystem and the WeChat, WePay, Tencent ecosystem. Those are unique stories that emerged at that point in time because it was the right time to emerge. I do believe that Southeast Asia has a chance to forge its own path, and that could lead to an even quicker acceleration, right, relative to China in the past.
Yeah. In that context, Sheel, when you look at deals in this part of the world, earlier the perception, and rightly so, was Southeast Asia is a discount. India may be also a discount compared to, say, China or the US. But with valuation sort of jumping up significantly over the last maybe 12 months, how do you sort of how has it changed here, in the sense that do you see a lot more challenging to get into the best of deals? Because, and we also have a scenario where the bigger players like the likes of Tiger coming in, closing a deal in 2-3 days, and with crazy valuations for some of the companies.
Yeah, so great question. Look, valuations are up everywhere in the world. There's not a market that valuations are not up very significantly across tech, and then even more significantly across fintech. I think people have realized, they've seen the exits, they've seen the success stories, they've seen real revenues from some companies and said, okay, we underestimated the size of this thing. And, money has poured in, a lot more funds are out there. Many funds are, interested in access more than price. And so it's been kind of crazy. I think sort of more specifically, my recent take would be India, a similar company in India and it would raise at a similar valuation to a company in the US. Maybe India would raise at a higher valuation now. We saw this in 2015, actually. And then, things kind of really cooled down in India. And then starting 2018, really, things started to pick back up again. And Southeast Asia, I think there still probably is a little bit of a discount compared to a similar company in the US, but it's not very steep. Another part of the reason is cause for excitement. It's all of the tier one funds, most of the great funds in the US are interested in these markets. They never were before. A lot of funds, frankly, barely left a small radius of Silicon Valley, forget, another country. And now I think everybody realized, oh, we missed out on these amazing opportunities all over the world. We need to get out there. And so, Andreessen just 2 days ago announced their first investment in India. I think you're going to see a lot more of this. And as the demand for great deals goes up, the price will go up.
So Tilman, how do you get into these deals with such increased competition, where capital today has almost become a commodity?
Yeah, well, so we like to think that our sector focus helps. We like to think that we know what we are doing. And I already mentioned earlier this notion of financial services are regulated at the national level, which means that there's real opportunity, right, to replicate thematically investments that happen in India, right, could happen in Nigeria. They could inspire somebody in Brazil to follow suit. And so we are very thesis driven from first principles. And we are developing these investment themes across multiple markets, and our portfolio company founders and our portfolio companies really like that, because for the first time they can talk to somebody who is almost doing the same thing that they do, and understand what the issues are at a much, much, much deeper level, but they're not competitors, right? Because they are in a different geography. And because of the nature of financial services, they are very, very unlikely to be competitors as well. So the fact that deep expertise and understanding based on first principles of where is true change possible. And in our case, we have also a very clear view of what we believe a fair financial system to look like. And we put that out there. You go to our website, we have written it down. And it means that there are certain things that we are really excited about because they improve people's lives. And there are other things that we will not do. And we find increasingly that entrepreneurs very much appreciate that. And so they want us on their cap table, in particular in the earlier stages. And we are right now benefiting from the interest of these bigger guys who are coming in later. We have been riding a few tigers here.
We are, we've run out of time. We are at the 40-minute mark, but I just want to maybe ask you both one final question, which is again more big picture with the regulatory crackdown that we're seeing in China. Do you think Southeast Asia and India stand to benefit in terms of more investors looking at the region? Overall, like, will it help the tech firms in South Asia?
Yeah, I think it probably on the margins has some impact. I don't think, the market is going so well that I don't think they need this additional, maybe small boost from the problems in China. I think about it as like, the markets are growing, and so there's going to be people interested in investing in those markets. I don't think people are saying, I'm going to take $1 from China and put it into Southeast Asia. Although, maybe in the public side, that is true.
And Tilman, how do you?
I would probably agree. I mean, Sheel said something, you said something earlier, Sheel, that is important. And it should remind us to remain a little humble here, which is there's so much liquidity because governments around the world were really, really concerned 18 months ago and propped up the economies in a massive way. So there's a lot of liquidity out there that is seeking yield. All asset prices are up. Housing, crypto, you name it, all asset prices are up. And the notion of, from institutional investors, pension funds, et cetera, to increase an allocation to private capital and venture capital in particular, that is not going to reverse anytime soon. So you will see quite a bit more venture capital. And if you look at venture capital total relative to the total capital markets, public markets, it's still a teeny tiny, right? It's relatively small. And so that part, our part of the world will grow. And those secular trends, if you will, are far outweighing sort of geographic shorter term shifts, is at least would be my conjecture.
Got it. Yeah, thank you so much. And just final questions, 30 seconds each. Predictions for next year, 2022 and beyond. If you can identify maybe one or two things that you would sort of be absolutely bullish on, what would they be?
Oh man, we're gonna beat a dead horse, but I think we'll continue to see a lot of action and great companies built in embedded finance, and we'll see those fruits. And I think we're on the beginnings of an upward march in fintech. So I take the view that we're at the very early innings, and there's a lot of room to grow, and we'll see that in 2022 and beyond.
Yeah, I again agree with Sheel. And the flip side to embedded finance, or there's this platform notion, and then there is the modern infrastructure that those two go hand in hand. And we have been super excited and been very busy on both accounts over the last 18 months, and we will certainly be busy on both accounts over the next 18 months as well.
Yeah, thank you so much. Unfortunately, we don't have time for more discussions and questions, but Sheel, thank you so much for joining. Tilman, pleasure talking to both of you. And for all our audience, thank you for tuning in and thank you for watching.
Thanks, Joji. Take care.
Thank you.
Thank you. Bye-bye.
Best to all.
Yes.